Hello, all. Thank you for joining us today. Hope you all had your breakfasts. Today, we have Mr. Sendil Manikantan, Senior Research Analyst, talking about the Indian auto industry and how to navigate its future. In an abundance of news lines and news flashes about the auto industry, such as UK looking for a greater share in the Indian auto sector and the FAME incentive scheme going past its preliminary budget, and Piyush Goyal asking auto industry to raise vehicle exports and many more, we all need some kind of clear outlook on its becoming. Without wasting any more time, I will pass on the podium to Senthil. I hope you all have a fruitful session.
Thanks, Tarun. Good morning, everyone. Thanks for joining this webinar on auto sector. Uh, so this is part of our TRUBLU series. TRUBLU is our large cap fund. So this will have a two-part webinar. First part will cover the auto sector, and the second part will be will covering the TRUBLU fund details. So let's dive into the first part. So broadly, today we will cover the 5 different topics. We'll start up with the consumer trends. So what the Indian consumer prefer today in terms of products, in terms of technology, etc. Second, we look at the industry growth, particularly with respect to the current ICE engines, that is the petrol, diesel, how is the industry and market structure. Then we will dive into the electric vehicle side. At last, we will end the first part with our view on how will the powertrain evolution will happen in the automobile sector. So first, this is Alan Woolley. He was the erstwhile CEO of Ford. So he has given a quote that this not only stands for auto products, but for every company which is into the B2C segment, I think they have to manufacture products which are customers want, not what they want to give to the customers. This is very particular to the auto industry. Last few years, we have seen that customers are moving towards SUVs in the passenger car side. So the OEMs which are not present there has to adapt and move into the SUV side. Otherwise, I think they will lose out the market. So we will see how the OEMs are performed in terms of this quote. So first on the Indian consumer. So 3-4 decades back, I think most of the OEMs perception of the consumer was that they are mostly value conscious and they will focus more on the how much mileage they will be getting on the vehicles, and the focus was more on the cost side. So gradually in the last decade, you see that consumers are becoming a little more aspirational. This is particularly as our per capita GDP grows. So once it crosses like $3,000, and as we move like close to $4,000, I think people will be more of aspirational kind, and because they'll be having a more ability to take on finance to afford a much larger and much pricier vehicles. And currently, the buying decision has been with the Gen Z now. So the Gen Z population, I think they're not just buying a product, but they're looking for experience with the product. So we have just in the last 3-4 decades moved from a cost conscious, mileage conscious to a aspirational and looking for an experience oriented buying. So that's how our consumer has moved over the last 3-4 decades. So OEMs has to adapt to this kind of expectation from the consumer. So this is clearly visible in the two-wheeler segment also. So if you look at the two-wheeler segment, so broadly it's categorized into 3 parts. One is the economy segment, where this is like a less than 100cc bikes and scooters, mopeds and everything. Then we have the executive. So that forms like 50% of the entire two-wheeler market. So these where the brands like Splendor, etc. comes in. So this is like a below 125cc kind of segment. Then we have a premium segment, which is like 150cc and above. So gradually, last post-COVID, we've seen that the growth rates in the premium segment. So 120 cc, that is the economy and executive segment, are yet to recover from their COVID lows. So this clearly shows that even in a two-wheeler product, I think the customers are preferring more of a premium and higher cc products. Let's move to see how the industry growth has been over the last 5-6 years. So here you can see that the growth rates across various auto segments, either be passenger vehicles, three-wheelers, two-wheelers, commercial vehicles. Last 6 years, I think if you look at the compounded annual growth rate, it has been like sub 5%. If you look at two-wheelers, it's still in negative 5%. So we reached a peak volume in two-wheelers in FY19, which was close to around 2.1 crore units we did. But even last year, like FY23, we were like 1.6 crore units, and FY24 also we won't be reaching the previous peak. We'll be still like 10% below the previous peak volume of 2.2 crore units. So broadly, the growth rates has been tepid over the last 6-7 years. So if you look at what has happened is that but let's look at the per capita GDP number over the last 6 years. It has grown at a rate of 6%, and even our real GDP growth has been, except for 1 year during the COVID, I think we are fairly in the range of 6-7% in terms of overall economic growth. So economic growth has been good, but auto segment growth has been lagging the overall economy. So we'll dive into one major reason for this is that affordability factor. So here you can see that between 2018 and 23, the cost of all the vehicles, either be two-wheelers, passenger vehicles, the price hike has been towards upwards of 30 to 40%. So these are various factors that has led to this kind of abnormal increase in price over a short period of time. Because if you look at the earlier period of 2013 to 18, the prices have been almost like a nominal, like 10-12% kind of price hike. But we have seen like 3x kind of price hike over a next 5-year period. So what are the key factors that has led to this abnormal price increase is that regulations. So we have seen the entire auto industry transitioning to from BS4 to BS6. So we know India skipped the BS5 norms. We transitioned straight from BS4 to BS6. Plus, post-COVID, we have seen across industries there has been a large inflation pressure in terms of raw materials, and there was freight issues. So supply chain got disrupted. We saw that companies are not able to produce vehicles because of shortage of semiconductor chips, and all those reasons. I think eventually it was got passed on to the end customer. So a 30 to 40% price hike for a vehicle during the same period. If you look at the real wage growth hasn't been that much. So that's the core part why the auto industry growth hasn't been in line with the economic growth. So let's delve into the market structure in terms of two-wheelers and passenger vehicles. So two-wheeler, if you look at the market structure, this for the last 1 year, if you see that so far in the market's been pretty concentrated one. So top 6 OEMs have like more than 90% market share. So we have seen that Hero and Honda and then TVS and Bajaj, top 4 OEMs, they got the bulk of the market share. So just keep in mind this 90% market share. While we discuss on the EVs, I think it will be an important point to look after whether we have to see that this market share and this type of consolidated market remains in the EVs also. So let's break up the two-wheeler segment into motorcycles and scooters. And then if you see the growth, I think both of them are yet to reach their previous peak. Especially motorcycles. I think motorcycles, if you see FY19, close to 1.3 crore units was sold, but even FY24, it's expected that it will be like 10% below. and scooters also like 5-6% below the previous peak. As we saw earlier, this is predominantly with respect to the steep price hike that brands like Splendor or HF Deluxe has seen. And expectation for the next 3 years is that with a low base and going forward next 2-3 years, we won't be seeing the kind of price hikes that has happened over the last 3-4 years. So price will be more of like a stable with a 2-3% price hikes. So people and rural real wage growth will be much higher than the price hike. So that will lead to a much better growth prospects for the two-wheeler industry going forward. Especially this will be led by the premium motorcycle segment. So overall growth will be like close to 9%. But the premium motorcycle segment will be in terms of double-digit growth. And the electric vehicles on a low base, we have seen that last 2-3 years, EVs has been growing. They are like now close to 6-7% of the market. So it will grow over the next 3 years in abnormal rate, but on a low base. We'll dive into the EV part later. So broadly on the two-wheeler side, the growth will be much better than the last 2-3 years, and it will be led by the premium motorcycle segment. Let's go into the passenger vehicle or passenger car segment. Even here, just remember the market structure. It's been pretty consolidated. Nowhere in the globe you can see that a top player having like a close to 50% market share. So here we have Maruti, which is close to 50% market share. And then we have a couple of Indian OEMs which has done predominantly well in the last 3-4 years, that is M&M and Tata's. So even in passenger vehicles, similar to the two-wheeler ICE market, that is the petrol and diesel market, it's been quite concentrated. And as we saw earlier, the premiumization trend is very visible in the passenger car segment. So here you can see that the growth rates in the above 10 lakh, and if you see the most of the growth rate has come in the category 50 to 20 lakh vehicles. So 19% growth rate. At the same time, if you see the growth rate in the vehicles below 10 lakh, it has been the negative zone. So this is where the small cars or the hatchbacks, entry-level hatchbacks come. So entry-level hatchbacks has been on the declining trend over the last 3 years, while the SUVs and the four-wheel drives and the experience-oriented vehicles has seen a good growth. And as the market adopted to this trend, yes, I think if you see that predominantly in the last 3 years, most of the new launches has come in the utility vehicle side. So utility vehicles used to be sub 50% of the new launches, but if you see last 3 years, almost 100%, 90%, and 83% of the new launches happened in the utility vehicle side. So number of models on the UVs has gone up predominantly in the last 3 years. So because of this premiumization trend, the share of UVs has gone up almost to upwards of 50% last year, and FY14 we expect it will close to 56% of the entire passenger car market. And even this year also it will be close to 80% of new launches from the utility vehicle side. On the other end, you can see that the entry-level hatchbacks, entry-level cars, the growth rates has been in the declining trend. So they have been degrowing over the last post-COVID for 3 years. Then FY23 there was a small growth of around 6%. Even FY24, I think the growth rates has been very tepid. They are degrowing much. So one of the main reasons for is that the customer segment who is focused on buying entry-level hatchbacks hasn't seen the kind of wage growth in line with the price hikes. So that's one more reason. Like we saw in the entry-level two-wheelers. And there was like regulatory norms for the two-wheelers similarly applicable for the passenger cars. So put together the regulatory norms, inflationary pressure with respect to on the commodity side, all of this has impacted the entry-level car buyers. So this is a quote by the current chairman of Maruti Suzuki. So with respect to small cars, so we know that Maruti is the overall market leader, but particularly in small cars, they have a market share close to upwards of 70%. So he is saying that small cars doesn't seems to be much attractive in terms of profitability, which used to be earlier, but they are still positive on the segment. So these are broadly the trends on the passenger vehicle and two-wheelers market structure. Uh, Next, we'll move on to the electric vehicle side. So these are as the technology transitions to the electric vehicle and not only electric vehicle, I think as we move from petrol, diesel to a CNG, flex fuel, and then we are expecting hydrogen fuel cells also will be playing a major part in the commercial vehicle side. So the new technology brings its own set of opportunities, also challenges for the existing players. So the current EV market in India. So here you can see there seems to be a start of a S curve in terms of EV sales. So EVs as a percentage of market used to be like nothing, like 10 basis points, something like that. But post-COVID, from FY21, you can see that the growth has been a bit exponential. And particularly, this volume has been led by the EV scooters. So last calendar year 23, the total electric vehicle sales in India was close to around 1.5 million units. And the growth rate has been like 50%. Predominantly, one of the major driving factors was that the famed subsidy that the central government was offering, along with the couple of state governments also offering their subsidies from their own state budgets. So last year we saw that one major change in the policy was that the famed subsidy was cut from 40% to 15%. So even after that, there was for 1 month there was a degrowth or a slight flattish kind of sales for the vehicles. But post that, I think last 3-4 months the market has again picked up. So this shows that even after the subsidy cut, I think the market is still growing in terms of sales, particularly on the electric vehicles. So if you want to break down the entire electric vehicle market, so last year out of the 1.5 million units of EV vehicle sales, two-wheelers like almost 900,000 units was from two-wheelers, and then 600,000 units was from the three-wheelers. So predominantly 95% of the EV vehicles was from the two-wheelers and three-wheelers. So the trend has been much lower in the car segment and then the commercial vehicles. So in terms of penetration, if you want to look at the overall penetration of electric vehicles in the market, so in the two-wheelers and three-wheelers, we see a good amount of penetration, 5 to 7%. These are the overall two-wheeler market and three-wheeler market. So as expected, the EV penetration will be led by the two-wheelers and three-wheelers. And so one question that comes up in any electric vehicle conversation is that is EV adoption mostly oriented towards urban and metro cities? But there was one interesting data point put out by Tata Motors. So you know that Tata Motors is the leading passenger vehicle player in the electric vehicle side. So they have now currently have close to around 70% market share in the electric passenger car segment. So they have put out a interesting data point where we can see that 50% of the demand comes from the beyond top 20 cities. And one more interesting point is that 70% of the buyers are using the electric cars as a primary car. So only 25% of them are using as a secondary car. And even 1/4 of the buyers are like first time buyers. So these are first time car buyers. So these are pretty interesting data point which shows that it's just the EV adoption is not going to be just an urban phenomenon. It's going to be a pan-India phenomenon. We look at why this adoption has been pretty good pan-India. So from the last data points, we come to a question whether the EVs has reached a point of inflection point. in terms of going exponentially from this level. So we can see here that from 1.7% of the overall market in 2021, 2 years back, they moved to around 4.5% in 2022, and last calendar year ending, they are close to 7% overall market share. And with this rate, I think the government's targeted penetration of 80% of electric vehicles in two-wheelers and three-wheelers seems to be much achievable. And they also have a target of 30% passenger vehicles and 40% buses. But I think looking at the current trend, the penetration in two-wheelers and three-wheelers is seems pretty much achievable from the kind of market structure. So one of the major factors that is driving into this adoption of electric vehicles in the two-wheelers and three-wheelers has been the cost of operation. So we know that a major cost of operating a petrol scooter or a motorcycle has been the fuel cost, and then the regular maintenance cost and everything post the initial capital cost that we invest in buying the vehicle. So EVs typically, even now, I think the electric, if you compare electric scooter with that of a petrol scooter, it still cost higher by minimum like 20%. But the adoption has been good because if you take into account the entire cost of operation over like a 5-10 year period, the fuel cost of EVs is like 90% lower because fuel cost only involves about charging via electricity, and that plays a key role in the when we assume the total cost of operation. We'll look at the how the calculation pans out, and that's one of the major reason I think the adoption will be much higher in terms of last mile deliveries for e-commerce, for food deliveries. Well, basically for these use cases, I think the usually the vehicle puts into use for more than like 40-50 kilometers per day, minimum 40-50 kilometers. So in that case, as the vehicle is getting used more, I think the use case for EVs increases. So typically, we have just compared if you're buying a petrol scooter and e-scooter today, and then if it is put to use for the next 5 years, and then it's typically if it is running for like 20 kilometers per day, and then set of assumptions include the current fuel cost and the electricity cost, what will be the yearly maintenance cost, and including the insurance cost. We also included the post 5 year if you want to replace the battery. So put together, even now, I think the e-scooter scores like 15% to 20% savings versus the petrol scooter. So clearly, even with the current battery cost, and so we have no localized production of battery cells currently in India. So mostly it is imported. So even with the current structure, e-scooters unit economies are much better than the petrol scooter. So this is one of the major reasons which is driving the exponential growth in the electric vehicles. Let's look at the what's the government's key initiatives towards supporting this industry. So one scheme, as I think most of you know about the FAME scheme. So FAME scheme is for the faster adoption of electric vehicles. FAME scheme is mostly oriented towards demand creation in terms of most of the incentives are towards the customers. So when we buy a vehicle, electric vehicle, the end customer gets the subsidy. So that's how the FAME scheme is oriented. Well, the PLI scheme, which is mostly oriented towards the manufacturing side. So here the government, the PLI scheme for the auto and auto component sectors, the government has announced that with a total allocation of close to around 23,000 crores, which will be spent over a 5-year time period. So as companies or as OEMs develop advanced automotive products, so advanced automotive products means that which will be into battery electric vehicles or hydrogen fuel cells. So those kind of new technologies, I think the OEMs or the component players will get incentives based on their sales and incremental what are the capex structures that put on the roads. So PLI scheme will enable localization of the e technology or the hydrogen technology. So let's look at the current market structure on the electric vehicle side. So in the two-wheeler ICE market, we have seen that top six OEMs have close to like 90% of the market. And even if you look at the number of OEMs in the ICE market, will be like mostly around 10 OEMs will be present. But if you look at the two-wheeler market, there are like close to 200 OEMs are operating in the two-wheeler electric market. And predominantly, the market over the last 2 years at least, I think, is seeing some amount of consolidation with the key players like Ola, TVS, and Ather are garnering or consolidating the market with the lower end players losing out. So this is the last calendar year 2023 sales structure. So here you can see that top 3-4 players continue to consolidate the market in terms of sales, and even the legacy players who are legacy market leaders in terms of Bajaj Auto, TVS also has been growing their sales. For example, if you can see that TVS is close to TVS is number 2 in terms of their market share, and Bajaj Auto, which used to be the number 4, became later. I think they have moved to number 3 as of last month. So even the existing OEMs are also very much active in the electric vehicle side. So they will also be a major player in the EV side. At least the market will take another 2-3 years to or 4 years to consolidate. So let's move to the three-wheeler electric market structure. So in three-wheelers, one interesting point is that this most of the sales are coming from the e-rigs, that is called e-rickshaws. So predominantly in the north, we can find that most of the local last mile, yes, either be deliveries or last mile passenger commuting has been happening over the e-rig side. But on the passenger vehicles, the electric penetration has been like around 5 to 10% now. It's been picking up. And even here, you can see that close to 500 companies are operating. Still, the market has to consolidate over the next 5 years. So in terms of three-wheeler unit economics, similar to two-wheelers, I think the initial cost structure is still higher in terms of EVs. Typically, I think the three-wheelers has moved from petrol to CNG over the last 5 years, but now I think the transition will happen mostly between CNG EVs. I think the demand will be happening between these two technology powertrains. So this is the last calendar year in terms of three-wheeler electric vehicle sales. Even here, you can see that the market is much more very diversified, and Mahindra has been the number 1 player. And here you can see that in the ICE market, petrol or CNG, I think Bajaj is the market leader. Bajaj has just entered the market in the last 2 months. So that's how the nascent is the market, and there's been a lot of new players who have entered the market over the last 5-10 years. But this industry sector will see a huge change going forward in the next 5 years. There will be a huge consolidation that will be happening as large players like Bajaj entering the market and Piaggio getting more products into the market. So we'll be seeing a much bigger market structure change over here. Moving to the passenger vehicle on the electric side, even here, I think since the penetration of electric cars has been like 1-2%, I think market is just getting started, and the first mover was Tata Motors. So Tata Motors currently has 70% market share, but no major players have entered in full in terms of EVs. So I think next 2-3 years, I think M&M has given out a slew of product pipeline on the EV side, and M&M has product technology tie-up with Volkswagen for the EVs architecture. So Maruti, the current market leader, has also put out that they will be coming out their first EV in 2025. Maruti, we know that Suzuki, its parent, along with Denso and Toyota, they are building up a battery cell plant in Gujarat. So mostly they're focusing on localizing the core technology first and then bringing the product later. So even here, similar to the three-wheelers and two-wheelers, I think the market will undergo a huge transition in terms of structure over the next 5 years. So, considering the current landscape, what are the things to watch out for in the electric vehicle side? First is the FAME subsidy. So the government started the FAME with the FAME 1 and FAME 2 subsidy. FAME 1 had a total outgo of close to around just 800 crores. FAME 2, they hiked the subsidy to close to around 10,000 crores. This is for a period of over the 4 or 5 years. And the FAME 2 will end this March. So we have to watch for what the government will the government bring a FAME 3 subsidy, and whether they will extend the FAME 2 subsidy with additional amount. So we have to see how the government policy on the subsidy side. Second is on the battery swapping. So if you look at the typical electric vehicle, the battery forms a predominant cost. It's like more than 30%, 30 to 40% of the vehicle cost is for the battery. So one interesting technology is that that has been predominantly adopted in Taiwan, especially. So in Taiwan, there is a company called Gogoro. So Gogoro has proven technology in terms of battery swapping. So those the vehicles are sold majorly without the batteries, and then the customers can go to any battery swapping stations, and then similar to what similar to what fuel pumps in India. I think they can just swap the batteries, and then it will take 2-3 minutes to just complete the entire process. So similar to filling the petrol for a bike. But in India, I think we are still yet to come up with the battery swapping policy. It was announced in the budget couple of years back, but still the no clear policy roadmap for the battery swapping. That I think that will be finalized over the next 1 year. So we have to watch out for this. And thirdly, on the PLI scheme. So the PLI scheme for the auto sector has been extended by 1 year. So earlier it was expected to start from FY23, but due to a lot of lag in terms of government putting out the standard operating procedure, etc. I think there was no approvals given to any of the OEMs. So the government has extended the PLI scheme by 1 year. So FY24 will be the first year of releasing the subsidies, and then we'll see next 4 years the subsidies for the manufacturing side. So here, I think the one key development will be the localization of battery cells. So here we are seeing that Ola is putting up a battery cell manufacturing unit. Even the current market leaders in lead acid batteries like Exide. Exide has started its battery cell manufacturing plant close to Bangalore. So Exide has a tie-up with a Chinese company for that technology called S-Volt. So there will be localization of battery cells happening over the next 3-4 years, and it will have a big impact on the cost of an electric vehicle. Also, we can see expect new players, global players like Tesla coming into the market. And one key factor will be also the charging infrastructure. So particularly with respect to the passenger vehicles and two-wheelers. So currently, if you look at the charging infrastructure in India, is like sub 10,000 charging points or charging stations are available. So there should be exponential growth in the charging infrastructure also. And with the PLI scheme and then the FAME subsidy, if it continues, and along with the localization of a lot of powertrain components, I think the TCO numbers will work in favor of the electric vehicles down the line. So as and when the new policy changes and everything, we have to reevaluate the TCO numbers. So if suppose if the localization and the PLI scheme everything works out, broadly the expectation is that in the next 7 years, the EV penetration will grow substantially, multifolds, and then it will reach like close to 40% by 2030. So coming to the last part of the presentation, so how we see as the market evolving in terms of powertrain, especially with respect to passenger cars, we see that from petrol, there is a some amount of transition to CNG, and then government is very focused on bringing flex fuel vehicles. So currently, the flex fuel in terms of ethanol blending has been close to around 20%. So if you look at diesel, they are the pioneers in terms of operating flex fuel vehicles. So CNG and flex fuel will be like a transition powertrains before we going full on the electric vehicle side. And so one more technology which is very promising, both in terms of cost and also in terms of lowering the pollution, is the hybrids. Particularly the players like Maruti and Toyota. I think Toyota has a very strong technology leadership in hybrids globally. They are the pioneers who started the hybrid vehicles like 2-3 decades back. So the market will have a fair bit of CNG, flex fuel, and then the hybrids. There are even last 2 years we have seen that we have seen places like Toyota launching strong hybrids, like even Maruti also in terms of cross badging. We have Toyota Iconos, Grand Vitara in terms of strong hybrid vehicles coming into the market. So we'll see a lot of new launches on the hybrid side also. So it's not going to be just battery operated electric vehicles. We'll see a slew of powertrains moving from petrol, diesel to a lot of newer technologies which will reduce the pollution at the same time be cost effective. And hydrogen fuel cells currently is still very nascent stage, particularly based on market research. We expect it to be mostly adopted on the LCVs or MHCVs, that is on the commercial vehicle side. So that's how we see the market moving over the next 5-10 years in terms of powertrain. So this we come to the end of the first part in terms of presentation. Moving into the fund side, yeah, this is just data on the how the CNG has been growing over passenger over the last 10 years. So the second part of the presentation is with respect to the fund side. So TRUBLU is our large cap blue chip fund, where so our investment philosophy across all the funds remains the same in terms of how long we hold the stock, in terms of investing, which is mostly contrary in nature and mostly from the bottom up approach. So all the funds operated the same investment philosophy of with high focus on risk management, either it be a small cap or a large cap fund. So TRUBLU in terms of portfolio structure, it captures both of the India growth story plus the global champions. So in terms of companies which are oriented towards global, plus also the companies which participate in the India growth story. So the 4 USPs of the TRUBLU fund is that predominantly it's 100% pure large cap portfolio, and even though it's a large cap portfolio, we have a quite high active share. So I'll explain in terms of how active we are in operating this fund. And it's a buy and hold strategy, and we have a 0 fixed fees in terms of fund structure, fee structure. So the fund will have close to around 22 stocks, completely large caps, completely from the Nifty 50 stocks. So Nifty 50 stocks will be our universe for this fund. So if you look at the fund structure of TRUBLU versus the Nifty 50, here it clearly shows that there's been a lot of, you can see the differentiation in terms of top 10 stocks, right? So here you can see that Bajaj Auto, which is not in the top 10 in Nifty in terms of weightage, is close to number 2 in terms of TRUBLU. So we have a big weight on overweight in auto sector also. So this is how we be very active in terms of managing the portfolio. For example, the auto sector weighted Nifty 50 is close to around 6.5%. But in the fund, we have weightage of more than overweight of close to 10% overweight. That's close to around 16-17% weightage on the auto sector. So similarly, across all sectors, it's a pretty concentrated portfolio and with a focus on risk management. So this is very visible in the TRUBLU's drawdown part. So here you can see that across the we compare with the large cap funds, I think our drawdown is much lower in terms of risk. So this shows how risk conscious we are. And broadly, the expectation is that 200 to 300 basis point over the benchmark. That's why we focused on operating this fund in terms of performance. And yeah, so these are mostly the TRUBLU's product structure we have seen. And then so our investment team in terms of led by Shyam Shekhar is the fund manager, and GR Balaji is a co-fund manager for TRUBLU, and he's also head of research. And we have broadly a vast fund management team. So who are CFEs and CAs. So it's a consolidated effort in terms of managing the fund. So as of performance of the fund, so we started the fund in 2021, and post that we can see that the outperformance of the index over the last 1 year and 2 years has been close to around 400-300 basis points. So this shows that both on the performance and also on the risk side, it's just outperforming the benchmark. And coming to the these are broadly the key terms in terms of that's we complete the entire presentation. I'll just open up for any questions. You can either raise your hand or you can just post your questions in the Q&A box. So we have one question on the hybrids with respect to the passenger car segment. We have the market share in terms of it. So hybrids currently it's very they're just products that got introduced in the last 1 or 2 years. So in terms of market share, it will be in like a sub 1% or new less than that. So because the products or the new products that are coming into the hybrids are in the higher vehicle side in terms of SUVs. So it is yet to penetrate into the entry level hatchbacks or the core part of the passenger vehicle. So but you'll see that over the next 5 years we expect hybrids will be garnering like a close to 5% or more than 5% market share. That's a broadly expectation on hybrids. Yeah. Yeah, there's Sarangan, I think you can unmute and you can ask.
Thanks. How are you, sir?
Good, sir. Yeah.
Good. Just a quick question. What exactly is the flex fuel? I'm sorry, I was catching up a bit late.
Okay. So flex fuel is about mixing biofuels like ethanol in petrol. So
Okay,
here,
just to enhance. Understood.
yes, sir. So to have a more of a for particularly with respect to two-wheelers, currently the government has a ethanol blending program where 20% of the overall per liter of petrol will have 20% of ethanol. So thereby limiting the import of crude or crude oil from the other countries, and also we have our own source of fuel. So it satisfies both on the national security plus also on the towards the sustainability kind of using biofuels in the overall mobility side.
Fine, thanks, sir. Is the flex fuel already available in the outlets on the roadsides all over India?
Yes, I think no, not in all over India. I think currently, as of last month, around 10,000 petrol pumps have a facility to for ethanol blended petrol of around 20%. So they call it E20. So around 10,000 petrol pumps across India currently has this facility.
And it's going to expand depending upon the availability of the the ethanol plants which is nearby, right?
Yes, yes. Currently, most of the ethanol is produced from the sugar. So
sugar industry, molasses, yes. Okay.
Yes. So as
okay, I'm a first-time investor for this. I thought I just got referred by Mr. Aravind, thanks to him. And if I get into this TRUBLU, how long I may have to travel the journey with you? Maybe 6 years, 9 years, 10 years. You are mentioning about long term. What should be to get a decent returns for me? I'm 52 plus. I'm sorry.
Okay. So TRUBLU is particularly, as you know that Arvind can explain to you in detail, particularly post call. So it's mostly focused on the true blue chips of the entire market. So the entire universe itself will be the top 50 companies. The Nifty 50 companies will be our universe. So we'll be investing only in the universe. So in terms of expectation on the in terms of time period, I think being focused on the large caps and even in terms of performance, we are expecting 200 to 300 basis point outperformance over the benchmark. So that's how we are constructing the portfolio. And in terms of holding period also, I think we expect, even though it's a large cap fund, the holding period should be at least more than 3 years.
3 years should be okay for me, no issues.
Yes, minimum 3 years is what should be the holding period.
To meet that expected 200 basis point, right?
That's
maybe well before that also it can happen.
Yeah. So yeah, the outperformance which we expect from the fund construction is that over the long term only. So minimum 3 years. Most preferably, if you have like a 5-year zone, it will be much better.
So once we achieve this 200 or 300 basis point, will there be we will scale up our expectations, or we will be just complacent with whatever we have achieved so far in the next 3 or 5 years, and we can come out of the flow fund?
No,
I'm sorry for many questions.
No. So the what are the performance that's part of the outcome. So basically, we are focused most on the process side. So whatever the 200, 300 basis point over the benchmark is just a number and the outcome. So we request all the clients not to look at the outcome. Majorly just look at the focus and what the process that is getting involved into constructing this portfolio. So if you look at the in terms of top 10 stocks versus the Nifty 50, there you can see that there has been in terms of stocks that getting into the top 10 also much differs from the Nifty 50, and also weightage also differs. That's where the active investing and the active role of the fund manager comes in, and the focus on the risk management side. So you also analyze that Nifty 50 include stocks which are into commodities, which are into a lot of volatile sectors. So when you're constructing a fund like TRUBLU, you're much focused on the risk side also in terms of minimizing the earnings volatility and etc. So risk-adjusted return also should be a major performance factor while a client is analyzing the fund.
I agree with you, sir. Yes, thanks.
What are the expectation in terms of performance is just an outcome. So it can be any number, but the focus is on the process. The process is well aligned with in terms of active investing. Yeah.
Thanks, Sandeep.
Yeah, thanks. If anyone has any questions, just post it in the chat box, or you can also just raise your hand. I can just unmute you. There is one question from Gopinath. How are OEMs adjusting to this transition? I think currently OEMs they have a very good plan in terms of products, in terms of technology tie-ups from the two-wheeler side, right up to the passenger vehicles. Even in the commercial vehicle side, the current existing OEMs have good plans to bring out new products on the EV side over the next 2-3 years. We will see that over the next 2-3 years. Especially on the passenger vehicle side, we Tata Motors, M&M, Maruti, all of them have good product pipeline on the EV side over the next 2 years at least. I think 2025 Maruti will be launching its first EV. Tata Motors already has a good product portfolio. They have Nexon EV, and then they will be launching EV on Punch this month. Then this is based on the S12 petrol architecture, the ICE engine architecture. But next 2-3 years, we'll see pure EV architecture based vehicles. So M&M has their own plan of bringing vehicles on the pure EV architecture. That is, they call it a born electric vehicles. Even on two-wheeler side, it's pretty much visible, right? Like especially last 1 year, we have seen that the TVS and Bajaj Auto, they have seen a slew of new launches or variants on the two-wheeler electric side, and they have resulted in gaining more market share. Currently, OEMs are have a good plan in terms of transitioning to. If you have any questions, you can just raise your hand or you can post it in the chat box. Yeah, thanks. Thanks, Venkat, for that comment. Okay, I think as there are no questions, thanks everyone for joining this webinar. Thanks and bye.
Thanks, Uncle. Have a great
Thanks,
day.
sir. Yeah, thanks.